Welcome back to the channel, ladies and gentlemen. So we're talking about Ark's new disruptive stock. This is one that I like a lot. Unfortunately for you, though, this is video part 3. So if you haven't seen part 1 and part 2, make sure to do that first, or you might get a little confused. What the heck? If you want to, go ahead, watch this part 3. You may just catch on, because I know you're extra bright. But before you do that, make sure you smash that like button because it really helps out the channel. And by golly, if you haven't joined our family yet, make sure you subscribe, hit that bell so you can get notified every time I drop a video. But now, without any further ado, let's go ahead and get the rest of this investor presentation out of the way.
With this customer, this represents more than $100 million a year opportunity. I would like to spend some time talking about what it is that we are doing that is different. This part is the poster child of parts that you would want to use additive manufacturing for. This part has a lot of internal structures, making it not manufacturable by machining, very difficult to cast, and even difficult to manufacture through machining or casting of individual parts and then welding them together. In either way, this is a difficult to manufacture part with that could be manufactured as an assembly, as a number of parts that would then be combined together with a high manufacturing cost. This is the perfect part to try to produce by additive manufacturing. The problem is when you try to produce this part by additive manufacturing, by the commodity additive manufacturing, what you see is what happens on the left. All the red material that you see on the left is support material that is added to this part in order for this part to be able to produce and not destroy itself while it's being produced. As this part is being produced, when you finish the production, now the part contains all this additional metal that is inside the part in all these internal cavities, in all these internal structures that are not accessible to the outside world. The problem now is that this part is really not usable because there is no good way to remove all this support material from it and no good way to finish it to the right surface and to the right qualities inside. So the only thing that you can do with this part by commodity additive manufacturing, once you finish it, is to take it carefully and put it in the garbage. There is no good way to actually finish it. What you can see on the right is how we produce this part. This part is produced with our support-free technology, such a way that there is not a single support inside the part, and the part, as is, all these internal cavities are already their final performance as produced from the machine. And this part is an example of the type of capabilities we bring. And when we look at all the 4 previous examples, whether it's SpaceX, Honeywell, the flow and gas company, the flow company for the energy and oil and gas industries, as well as the aerospace engine manufacturer, in all of those, it was about parts that their internals would require to have supports in places that are not accessible, and that the elimination of those supports by design would incur performance compromises, performance degradations. And with our technology, we can eliminate the need for supports and we eliminate the need for this performance degradation. The way we accomplish that is by bringing to market a full stack solution. This is a solution that includes software, the print preparation software that is called Flow, the family of our metal additive manufacturing printers that is called Sapphire, the quality control software that is called Assure, and our underlying manufacturing process. So Flow is prescribing the process, Sapphire is executing this process, and Assure is validating this process. These blue arrows that are the interfaces between Flow and Sapphire and between Sapphire and Assure are proprietary encrypted interfaces. This is all one environment, one solution, one turnkey product that allows the customers to start getting the product and immediately making parts without having to spend years developing processes, solving part-specific problems. All those part-specific problems are already solved by Velo3D. The crucial part that we are doing is that Flow is a very intelligent software that is doing extremely sophisticated computations, where it is identifying all the unique features in the part that require unique manufacturing processes or manufacturing recipes. Flow applies those recipes to the part and creates a single manufacturing file that is going to produce them. Sapphire is then executes those recipes. And we had to invent a number of new system innovations in Sapphire to be able to execute those recipes, a number of places where Sapphire is deviating from the existing powder bed fusion architecture to execute those recipes. And Assure is validating those recipes, and it is extremely critical to validate those recipes because these recipes in many of the cases are extremely difficult to control. So we have to validate that the machine is always exactly calibrated exactly the way we set it up so that the result of the execution of this recipe will be successful. We had to develop the full solution, the full 4-product solution in order to be able to execute those recipes. This statement that we are way ahead of competition is a statement that we hear from many of our customers, and frankly, we heard it also from some of our competitors. We protected our technology with a deep IP moat that is intended to increase the risk and reduce the likelihood that someone would copy our solution. Our IP is protected by extensive number of patents that are protecting the systems, the methods, and in some cases, the composition of matter that we are producing. And those patents can be used to prevent people from copying our systems and selling those systems, from using those copied systems, and from trading in the parts produced by those systems. We launched our product in Q4 of 2018, and then in 2019 to 2021, our focus was on seeding the market, expanding the customer base, and diversifying the applications. This is 100% about technology adoption, about learning the value proposition, and figuring out how to sell this product. Starting 2022, we are in the scale-up phase in the broad commercialization, is replicating what we have learned how to do with the first few customers and with the applications where we learned to provide value. Of the $89 million that we planned for 2022, more than $50 million are already accounted for in the form of bookings, pre-orders, or recurring revenue from existing systems that are already sold. We have 4 drivers that we strategically use to direct our growth. The first is the blue ocean principle. And the idea here is we are only focusing on applications where we are the only one that we can solve the problem of the customer uniquely. We can provide unique value, and as such, we can create an opportunity and nurture an opportunity that we are the only ones that can serve. The second principle is the principle of land and expand. We are only focusing on manufacturing customers that in our vision would need many systems in the years to come. And as such, we are going to get more and more revenue from those customers as they will expand their relationship with us. The third principle is the introduction of new products that expand our competitive advantage and expand our addressable market. And finally, new customers are extremely critical for our land and expand model. Even though the vast majority of our revenue every year is coming from customers that we acquired earlier, new customers and expansion of the customer base is critical for future revenue. So expanding this customer base is important, and expanding geographies and expanding partnerships and doubling down the sales force and our marketing team is critical to drive this growth. I will now hand it to Bill.
Thanks, Benny. Turning to slide 29, the first element of our strategy is to focus on the market we call the blue ocean. These are those customers who want the advantage of additive manufacturing, but for whom the complexity or geometry or other internal features of their parts is such that only Velo 3D technology is capable of making those parts. We explicitly avoid competing for applications in the red ocean, which are those applications that can be served by multiple existing 3D printing players. In this way, we're building a market where we alone can operate. We believe this market is very large and can reach $20 billion in sales by the end of the decade. Turning to slide 30, the second part of our strategy is to land and expand at every customer. We sell only to production customers and not to prototypers or research labs or the like. Production customers, as a rule, need multiple systems. Their demand grows over time from an initial system that they use to qualify the technology to multiple systems as they scale up their manufacturing activities and expand their use of our technology for more and more parts. You can see this pattern demonstrated with these 5 of our recent customers shown on the chart, and how in just 2 years they bought more and more systems. On average, we would expect a single production customer will buy 9 systems over the first 5 years. Turning to slide 31, the third part of our strategy is to expand our technology lead and our addressable market through new products. Our next new product is the Sapphire Xc, which will ship in late 2021. It's a huge step function increase in part size capability and productivity. It can make parts that are 400% larger than the existing Sapphire system, and at a production cost for our customers that's 65 to 80% lower than existing systems, thus making our additive manufacturing technology competitive against legacy metal manufacturing techniques in a much wider range of applications, and thereby expanding our market. This product has seen very strong customer demand. We already have orders and reservations of $47.5 million for the product to date. Turning to slide 32, the fourth part of our strategy is to accelerate customer acquisition by entering new markets with distribution partnerships and ramping up our direct sales and marketing activities. Initially, in 2018 and 2019, we focused just on the U.S. market. Last year, we entered the Asia-Pacific market, and more recently, at the end of last year, early this year, we entered the European market by establishing key distributor relationships in those regions. As we get established in those markets, we'll see the same acceleration we saw in the U.S., but with a 1 to 2 year lag reflecting the latest start in those markets. So these regions are going to add new legs of growth to our top line as we penetrate them. We're seeing that already in Asia Pacific, where we've had several system sales already, and we're beginning to build a pipeline of opportunities in the European market. Let me now turn to the financials. Let's first look at slide 34. We have 2 transaction models, a straight sale and a recurring revenue model, which has a lower upfront payment and annual recurring payments thereafter based on utilization. We expect that the recurring revenue model will likely generate higher total payments over the life of the machine. However, many customers prefer it and are more willing to buy with the lower upfront fee, so it expands our universe of potential available customers and therefore our market to have both models. In 2020, 20% of our unit sales were recurring revenue deals. This year, we expect that to be 40% plus and to exceed 50% over time. So the recurring revenue stream generated by those unit sales will be an increasing portion of total revenue going forward. Turning to slide 35, this slide shows the expected lifetime cash flows from the 2 models. On the left is the pure sale, which has a $1.75 million upfront payment and $120,000 per year service contract. And then on the right, and these models are for the Sapphire, the existing Sapphire system. The recurring revenue model has a $750,000 upfront payment, $60,000 per year for the service contract, and $50 per hour of system utilization going forward. The ARR model, as you can see, is expected to generate 35% higher revenue and 70% higher gross profit based on an assumption of 70% utilization of available hours over a 7-year time horizon. Turning now to slide 36, as you can see, Velo operates a very asset-light business model with very low capital intensity. Our manufacturing operations are limited only to final assembly and test. We source all our components and sub-assemblies from vendors. So our manufacturing operations are easily scalable with limited investment. And over the next 5 years, we would expect the CapEx would be slightly less than 3% of revenue. Turning to slide 37, we have very good visibility into 2021 and 2022 revenues. We have visibility today on a total of $48 million, or just over 50% of our 2022 revenue target. As shown on the chart, this is comprised of $6 million of recurring and service revenue, $15.8 million of firm orders for the Sapphire Xc, and $26.4 million of pre-orders for the Sapphire Xc. So we need to book $14.3 million above our 2021 revenues to reach our 2022 target. On slide 38, I'd like to review our financial model for the next 5 years. As you can see, we expect to grow very rapidly and reach just under $1 billion of revenue in a 5-year time horizon. The big jump is in percentage terms is in 2022, whereas I described above, we already have visibility on 50% plus of that revenue. Our highly differentiated product is reflected in high gross margins, which even at our current limited scale are at 34% in 2020. Our gross margins will increase as we scale up the business, and we expect to reach 52% by 2026.
While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy-to-use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now, back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now. Or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.